जितने लोग हैं उतने लोग जगे हुए हैं. So we are starting our last but not the least session, but it is very much important to learn about the LFAR, because we know how to check the advances, how to make the planning and documentation, but LFAR is the main role in statutory audit of bank. So in LFAR there are many sections, not only advances, but we have to check many things in LFAR. And the reporting is also very much important, because we have to give the detail of large advances in all the banks. And उसके लिए भी सर बहुत डाउट है अभिजीत सर, कि जो हमें लार्ज एडवांसेज का देना होता है वो 10% ऑफ टोटल एडवांसेज है कि क्या उसकी लिमिट है. तो आप अपने उसमें एड्रेस में वो भी क्लियर कीजिएगा कि कितनों की हमें डिटेल देनी होती है LFAR. सो वी हैव विथ अस CA अभिजीत सांझगिरी सर, एंड he has passionate about the speaking and giving guidance to all the CA. तो हमने उनसे जब उनका प्रोफाइल मांगा तो उन्होंने सिर्फ ये 2 लाइन का प्रोफाइल दिया कि मेरा प्रोफाइल नहीं बताओ, टाइम वेस्ट मत करो, मुझे ज़्यादा से ज़्यादा लोगों को बताने का मौका मिलेगा. सो this is the thing. So what he gave me the profile that Abhijit Sanzgiri is a CA and a law graduate with over 35 year post qualification experience and 25 years speaking experience, over 800 seminars. बस इतना brief profile दिया है, but he is the I can say the creator or part of AQMM जो बना था उस कमेटी में, he has the most important role. एंड इथिक्स एंड जो भी चैप्टर पे बोलो ये बहुत अच्छा हमें गाइड करते हैं. सो लेट्स वी वेलकम हिम विथ गुड राउंड ऑफ एप्लॉज. एंड आई रिक्वेस्ट सर प्लीज कम, आई वांट टू गिव यू अ मोमेंटो विथ आवर ग्रेजुएटी. So sir, that is your and
thank you. I think the expectation gap is what everyone talks about. So the regulators and the auditors. So one should not give, in my opinion, too much of a hi-fi profile so that you raise expectations and then you don't deliver as per expectations, because RBI always comes out and says you don't do this, you don't do that. So fine, that's one. The second, it's like the LFAR. We are actually simulating a real life LFAR situation now, or a bank branch audit situation, where we may start at any time, but we have to end on time. So 5:30 is what I'll end, very clear. It's not that I'll skip through anything. I'll tell what is the most important. So when we say what is material, I'll cover only what is material. Any questions at the end, I'll answer till whatever time. So let's get started right away without wasting any further time. Long form audit report. So LFAR. And I'll just cover that in 4 key messages, taking the letters itself from the long form audit report. And it's L is the limitation, F are the frauds, A is the assurance, and the R is the risk. So I'll talk on the LFAR, is on the limitation, on the frauds, on the assurance, and on the risks. And that's what I'm going to cover in the next 40 minutes. Limitation. We are on 28th of March. And I really don't know how many of us have got the bank audits, how many of us have not, and how many of us, having got the bank audits, have started the work. And even if you get the bank audits, the branch manager is very clear. You please start from 2nd of April or 3rd of April or 4th of April. And what do we do in the long form audit report? One is we do an audit, we report, very clear from the word itself. But we report, and the expectation is that we report on the systems and processes which happen in the bank branch for the year. And the year is from 1st April 2024 to 31st March 2025. So the first limitation is that we are never there in that period. And we report, and we have to report on the systems and processes, the risks, the deficiencies in controls, the gaps, the vulnerabilities, or the threats, if any, for the year. So that's the first limitation we start with, that we were never there in the branch for the year. So how can we comment on the systems and processes in the branch for the year when we were not there in the year? And there are some basic questions which are asked, and I'll just cover one example. And the start itself, there's a question on cash, and the question asks, has cash been or is cash in effective joint custody of the custodians throughout the year? And what do we say? Yes. We're very prompt in saying yes, because we don't like no. But here we like no, because we are giving a qualification. I think we are the most happiest of the lot when something is not applicable. Because not applicable means I don't have to do work in that area. So something like money at call and short notice, investments are not there in the branch, at the head office, fine. Foreign currency, this branch doesn't have a foreign currency, good, not applicable. The point is, on what basis are we stating not applicable? Is this not applicable stated because the branch manager has said it's not applicable? Or have you done some diligence based on the transactions which are happening, on the trial balance, if you've seen that, or maybe the organization chart and seen the job responsibilities and see what each one is doing? So never rely on the branch manager or his representations. They are never anyway a primary source of evidence. They are a secondary source of evidence. So wherever you have a not applicable scenario based on a representation from the branch head, please do your own diligence. The second, systems and procedures for the year, and we are taking an example of cash. How do we say yes? Obviously, when we say yes, it is based on what we did, how we did, and to what extent we did. What we did, how we did, and to what extent we did. So what did you do? You were there only after the year end. So you would have verified cash, and we all of us do. We verify the cash on 31st March. 31st March, either at the end of banking hours, 1st April, either you get the branch open, or maybe it opens on 2nd April, before the day begins, you check the end cash. And then you'll find the two custodians there, and that's how you have verified that the cash is in effective joint custody for a different year, which you are never the auditor. So that's one. The second, you verify the cash book or the cash register, if it may be in the system, and you may be seeing that there is a maker, there is a checker, or there is a custodian number 1, custodian number 2 who have signed. So that's an evidence that cash is in effective joint custody. The third, if there is a concurrent audit, you would have seen the concurrent audit reports, and concurrent auditors in their checklist would have stated that cash is in effective joint custody, and you would have relied on the report of the concurrent auditor. Now again, we have our standards of auditing, which state that if you are relying on any external report, especially of a concurrent auditor, then basically be satisfied that the concurrent auditor has actually done his work correctly, diligently. So it may involve meeting the concurrent auditor, discussing with him what he did, how he did, to what extent we did, and if we are satisfied, then we can rely on him. So we are also relying on the concurrent audit reports if they are there. Then we are taking representations from the management that cash is in effective joint custody. Then there are surprise checks conducted by the branch head or some other officers, and the reports of those surprise checks would be on record. So we would have seen all this, and based on that we say yes. So the yes has a background story to it, which we don't generally state, and I don't know why we don't state it. There is no limitation of space. If we see a limitation of space, I can always say annexure 1 and make an annexure and write my story there. So my answer to that yes will be, we have verified the cash on 1st April 2025, and cash on that date was in effective joint custody of the custodians. We have reviewed the cash book, cash register, whatever for the year, and the initials of the custodians, evidence of the cash being in effective joint custody. We've got the representations from the branch head who has asserted that cash is in effective joint custody. We've reviewed the internal audit reports or the concurrent audit reports for the months, and the concurrent audit reports have either stated that cash is in effective joint custody, or they have never written anything in adverse that cash is not in effective joint custody. We've also seen surprise test checks of cash done by whoever at various points of time, and nothing adverse has been stated on the custody of cash. Based on the above, nothing has come to our knowledge which causes us to believe that cash is not in effective joint custody. So that would be my answer to this, not yes. So the first limitation is, I will state that I was not there in the branch when I start my LFAR, that I was never there in the branch for the entire year on which I am supposed to report. I have commenced my audit on so and so date, and I have ended my audit on so and so date, so I was in the branch only for these periods. And I believe somebody said this is the bank audit season. I think this is the IPL season. And IPL, when it started in 2007, it looked to bank branch audits for inspiration, 20 days max. उस समय 20 दिन मिलते थे. अभी IPL के 20 ही ओवर है. हमारे ओवर्स either it's a T10 हो गया or it's a rain curtailed T20 where we get only 6 days. So when you enter a bank branch, one thing, like I said, the time 5:30, you get a clear indication from the branch head that this is the date you have to sign. Anyway, after that date I am not there. My ticket is booked for कुंभ मेला, कहाँ भी जाना है उसको. So I won't be there. So there is no choice for you to sign because the balance sheet has to go. It's a listed company. The deadlines have already been committed. So the limitations, we have limitations of days, everybody knows. But then what do we do? So we know there is a T20 match. It's a 6-over match. We just got to start hitting from ball 1. So we need to be prepared even before we start the bank branch audit. So maybe that's where the WRC feels that you all need to be prepared. You need to have the checklist. You need to have the questionnaire. So before even you reach the branch, your questionnaire of what is the data requirement you need from the branch has to go to him. And that checklist, whatever is there, I think in your books, the WRC series which is there, that checklist is already there, what you need to send. The institute has also prepared an Excel utility tool, so that's a good guidance. So send him even before you reach there. Get the trial balance, get the organization chart, and just start right from the moment you arrive. End of the day, whatever you have not received, just send a mail that this is what we had asked for, this is what we have received, this is what we have not received. Continue this for the next 2-3 days. If on the 4th day you don't receive it, something which you asked on day 1, day 2, day 3, start escalating it to the regional head. If you don't get it on the 6th day, start escalating it to the zonal head with a CC to the central statutory auditor. And if you're not getting anything, and if you want to disclaim that we did not have all the informations and explanations which to the best of our knowledge and belief were necessary for the purposes of the audit, you have all evidence that you have escalated it to all the right sources. So it's not something that you're at the last day you're waking up and saying, how can I sign when I've not had any data? You have had escalations right from day 1. You have a data request going to the branch head even before you enter the branch by mail. And on end of each day, you have a recap of what you got, what you didn't get. So you are creating a firm evidence of what is there, what is not there. Then our audit report is finally we report. And in the audit report, we talk of 2 things. We talk that we conducted the audit in accordance with the standards of auditing. It's a very profound statement we make. The standards of auditing, 38 standards of auditing, each may be average about 30 pages. Especially the key is SA 240 on frauds. So LFAR F stands for frauds. SA 315, the risk assessment with the knowledge of the entity and the environment. And SA 330, auditor's response to assess risks. So these are the 3 important standards of auditing, I would say, Amar Akbar Anthony, which we can't bypass. In every audit, you will need to have SA 240, SA 315 and SA 330 compliance. And then you will have the sidekicks, SA 230 documentation, SA 320 materiality, SA 530 sampling. So materiality, and materiality is not just to amounts, materiality is also due to classification, materiality is due to disclosure, and materiality is also on presentation. And we talk of material misstatements, and misstatement is anything if it's not stated correctly will alter the decision making of an end user. So if you have stated something or not stated something, if you have disclosed something incorrectly or not disclosed or partially disclosed, if you have presented something wrongly, classified something wrongly, and if any stakeholder, be it the supplier, auditor, investor, borrower, has taken a different stand, than what he would have taken if the accounts were stated correctly. It's a mistake. Now, whose duty is it to ensure that everything is in order? Whose duty is to ensure that the financial statements give a true and fair view and are not materially misstated. Whose responsibility is this? Management. So management is responsible for all this. Has management discharged its responsibility? If no, then state it so in your audit report. Frauds. The limitation of audit is the time. The frauds is a reality which can happen anytime, all times, every time, sometimes, few times, anytime. So frauds can happen. Now, whose responsibility is it to prevent frauds? Whose responsibility it is to detect frauds? It's the management. In the 5-6 days or the 10 days, if you are lucky, if you are there, is there any way that you can detect a fraud? It's impossible. And frauds have been defined in the Master Circular of Frauds. Anything which is a diversion of fund, anything which is a siphoning of fund, anything which is a misrepresentation or a misstatement of the financial statement of a borrower is a fraud. Anything by which the borrower inflates his stock statements to get more draw power from the bank, which may be in every 4th or 5th borrower you will find the case of inflated DP. It's fraud. Have we understood what is fraud as per what is the RBI circular? And auditors have a responsibility to report fraud. Are we discharging our responsibility as far as frauds is concerned? But it's whose duty to find whether the DP is correctly stated or not. It's the management's. And if the management is not discharging its duty, I think that's what you should state. So first, very quick on frauds. Is there a fraud policy at the branch level? Now the branch doesn't make a fraud policy. The fraud policy will be framed at the central office level. So is the copy of that fraud policy available at the branch? Is the policy copy which is there, maybe not physical, available as a soft copy on the intranet or via mail? Is this the latest updated policy? Has the branch head or all the officials of the branch read the policy and understood this policy? Are there periodic fraud trainings happening at the branch so that the branch employees know what is frauds and what are the controls to prevent, detect, mitigate, control, correct frauds? Are there fraud risk scenarios identified? So, SA 315, identifying risks, and fraud is a risk. SA 330, auditor's response to assess risk, fraud is a risk. What is the response to that risk? Primary responsibility, management. Is the management identifying frauds? Is the management implementing controls to prevent frauds? If no, if there are no visible controls, and when we test an IFC, we see a risk control matrix, and in the risk control matrix, the risks are stated, the controls are mapped, the residual risk, which is the inherent or the gross risk, that anything can go wrong, which is a risk, minus the controls. The residual risk is the gap, vulnerability or threat, and the GVT, that a fraud can happen, has to be demonstrated that a fraud can't happen, or if a fraud happens, it can be detected immediately and the loss recovered, or the loss will not go out of the bank. So if there is no demonstrated implementation of the anti-fraud control, you can safely, factually state that in the LFAR. So wherever any fraud happens, and most of the frauds are detected by, who detects frauds? I think the biggest frauds are ever detected are by whistleblowers. Management, if it is committing fraud, will never disclose the fraud. So if a branch head, as maybe in one cooperative bank some frauds were being committed, cash was being siphoned off, loans were given to undeserving people, why will he disclose that fraud? He is the one who is committing the fraud. Now if the frauds are so well thought of and so well implemented, that how will an auditor in the few days he is there detect it? So frauds can only be detected by whistleblowers, and that there are enough statistics to evidence that. As late as maybe there was a case of some model or some actress, there was some gold found which she was carrying for long, for a year almost. It was also detected by some tip. No management detected it. So when frauds can be detected only by tips, majorly, not that internal auditors don't detect fraud. So the next, the distant poor second source is the internal audit. The third poorer source is the stat audit. So the possibility of detecting frauds being lower, what we can do is to disclaim, or not disclaim, factually state that this is the primary responsibility of the management, and the management is not discharging the responsibility well because of 1, 2, 3, 4 which we discussed. So the next is the frauds. Now the assurance. The institute says that you certify accounts as true and fair. Institute never says you certify the accounts as true and correct. And in a report like the LFAR, where you are there only at the end of the year or in the next year, why are you giving an absolute assurance when you state yes? So give a limited assurance in the way I suggested for the cash answer, and state what you did, how you did, to what extent you did. You can't do 100% checking unless in certain cases it is mandated. So where is it mandated that you do 100% check? You do 100% check only for advances in excess of 10% of the total advances of the branch, funded or non-funded put together, or you can take even the funded, or 10 crores, whichever is higher, lower, what? I would take the lower to be even conservative. So anything over 10 crores I will do. Anything more than 10% of the total funded advances of the bank I will do. And the rest I will do, let's say if it's an educational loan, vehicle loan, car loan, mortgage loan, loan against shares, loan against gold, whatever. I'll check a few samples. So I run through the entire portfolio, both retail, both wholesale, cash credit, term loans, bills purchased discounted, rupee, loans in INR, loans in foreign currency. So I'll have the entire flavor and report. And when I am reporting, I am not saying yes, I am saying my reporting is basis the following advances seen, and I will give a list of those advances which I have checked, maybe in the report or by way of an annexure, that these are the advances I checked, and my answer to whatever questions are there are based on these checks. And in these advances, this is what I checked. So I checked the application, I checked the sanctioning process, I checked the appraisal, I checked the documentation, I checked the disbursal, I checked the review, monitoring, supervision, I checked the income recognition, asset classification, I checked the final one-time settlement, I checked the litigation process, and finally if the loan was closed, I checked even the handover of loan documents. I also checked the closure of the loan account from the system. So I've checked everything from the start to the end, and only for these accounts. So this is the sample. So I test and check sample, and I specifically state this is what I did. So please ensure that your LFAR contains the limitation as to date first. The fraud aspect is well bought out. The assurance is a limited assurance, and it clearly brings out the sample. And the R, the risk responsibility. What is my risk appetite? And this is something I need to introspect. Risk appetite is how much I can bear. If I say yes and something goes wrong, what is the first question asked? If something goes wrong in any financial statement, what is the first question which is asked? Who's the auditor? Nobody is asking who's the management. How dishonest or unscrupulous the management was. The question always asked is how competent was the auditor. And then you have various watchdogs just bringing over our blood. Maybe the council members will know how close they are to maybe getting even one small opportunity to hit at us, and we are giving them. We are easy fodder because of our own choice. Why do we give an absolute assurance and say yes? The best defense till date to an auditor. What is the best defense to an auditor, even if there is something wrong? The best defense to the auditor first is that, and the only defense is that he conducted the audit in accordance with the standards of auditing. That's our Bible. That's our Gita. That's whatever. And in that standards of auditing, there is an SA 530 which talks of sampling, and he says this was not in my sample. The second, he will try to take shelter of SA 320. This is not material. He will take shelter of SA 315, SA 330. He will take shelter of whatever he stated, what I told you to state, that fraud is the responsibility of the management. The management has not discharged its responsibility. There is no fraud risk register. There is no fraud training. There is no control. There is no demonstration. So if there is nothing on frauds, then frauds can easily happen. And I have stated it very openly. My duty is not to check each and every fraud. My duty as an auditor is to bring out the weakness in the system, and unless it is very apparent that a fraud is being committed, and when you talk of fraud, these are accounting frauds, so anything called a window dressing, anything called a whitewashing, anything called an evergreening, I have to have my eyes and ears open. So an advance which is 120 crores as of 29th March 2025. And remember, my fees gets increased by some percentage if the advances are over 125 crores. So last day, genuinely he disburses some amounts is fine. But you will see huge loans being taken or overdrafts being taken against fixed deposits, which will inflate the advances. Or if there is a cash credit with a lot of balance, the borrower will either withdraw cash or transfer cash to somebody, or transfer cash in his current account or savings account, and he'll pay 12%, 13% interest for those 1 or 2 days, and again on 2nd April, 3rd April, get the money back. Clear cut case of window dressing, which we don't report. Ideally we should, because there's a specific question asked. So these are all fraud, because frauds are very clearly stated by RBI. A cash shortage of more than 5,000 rupees if found out by the auditors is fraud. A cash shortage of 10,000 rupees if found out by the bank is fraud. So any cash shortage is also a fraud. Anything which a borrower does to inflate his stock statement to get more drop over from the bank than which he was entitled to is fraud. Any manipulation of invoices to get more funds. So when you get a term loan, you get a term loan of 100 crores. That means ideally the cost is say 140 crores. You've got 75%. But that 140 crores is actually 60 crores, which you have inflated the bills and made it as 140 crores. So you've got 100 crores. You've got in fact 40 crores more than what you needed. So there's no margin from your side. That's fraud. Now whether the project is inflated, there's no way you will come to know, because you are there only for 5 days. You have not got there at the borrower's factory to see this. Obviously it's the duty of the stock auditor. But whether the branch is taking care to ensure that the fraud doesn't happen is what you need to see. You need to ask him, you need to see the evidence. If the evidence is not there, you state that you have not got any evidence, so you may not be in a position to comment on the adequacy of the fraud management system. I think this factual statement would be good enough. So let's say there is a fraud in a bank and somebody asked you, what did the auditor do? So instead of hiding around, you will say, yes, I am the auditor. This is what I said. Now the equation changes. You have the entire media covering everything. So suddenly, who are the auditors? What did they do? Duties of auditors, irresponsibility of auditors. The equation changes to auditors had highlighted, but the management didn't do anything. The entire sequence changes. So that's only possible because of the R, which is the reporting and the responsibility. And what is your risk? What is the audit risk? What is an audit risk? When we sign a report, what is the risk we take? We give an assurance, yes. But what is the risk? Disciplinary action is the next case. वो थोड़ा दूर है. Financial risk is, yes, you take a financial risk, because if the disciplinary committee finds you guilty and it suspends you, then you cannot sign and there is a financial risk. But again, that comes. The biggest audit risk is that the fact that the accounts which you are signing, which says that the accounts give a true and fair view and are free from material misstatements, may not actually be free from material misstatement. That's the simple basic risk which an auditor takes. Then how does the auditor de-risk? What does the auditor have? The auditor only has the audit report. And in the audit report, and maybe in a bank branch, he will have the LFAR. In other companies, he will have the CARO. So, he may issue a qualified opinion. The qualified opinion could be adverse or it could be a disclaimer. So, depending on your judgment, your skepticism and the facts, I think one needs to be very clear and bring out what are the true facts. If it needs a qualification, it should be qualified. And one thing, please don't do, is sign the LFAR before signing the balance sheet. Because once the balance sheet is signed, you will not get any data for the LFAR. And in the LFAR, you check a lot. And you might get a lot of stuff which might lead to an alteration of the otherwise audit report. So, sign everything together, including the certifications. And there will be a lot of times when there might be a, I won't say a qualification, an MOC. An MOC is a journal entry, which is an amendment to the financial statements, because the accounts are read with the MOC. There would be pressure from the branch head or maybe from his higher authorities, depending on the quantum of the entry, to drop the entry. They will rectify it in the next year, and they will even rectify it in front of you, or classify it as an NPA in the next year. But the point is, you are auditing for the year, and the accounts for the year would not give a true and fair view. So, you will need to pass the MOC. So, they give you another bright idea. Don't qualify. You can put whatever you want in the LFAR. So, please understand, LFAR is not a dumping ground. LFAR mein you can write anything and everything, but not anything which is a qualification. If you have qualified, you can write the entire history, geography, the physics, chemistry, biology in that as an addition. But the qualification has to be a qualification, and it has to come only in the audit report. So, ensure the audit report, which is your Brahmastra, use it wisely, use it smartly, use it consciously. So, the qualification. The second, we also state one thing, like in a bank branch audit, you are always conscious of the time. I am also conscious of 5:30. We also say, apart from we conducted the audit in accordance with the standards of auditing, so at a lot of times we may not get the MRL. And MRL is directly SFIT. If the MRL is not received, you can directly say, I have not got the MRL and SFIT has not been adhered to, straight. Now, if MRL is not received, how come certain assertions are verified by you? So, you will have to do additional checks. So, be prepared for the documentation and the answers if you are stating that. Anyway, if it's not received, you have to state it's not received. You can't help it. The second we state is, we've complied with our code of ethics. Now, which code of ethics? How many of us have read the code of ethics? We all know about code of ethics. There's something which comes out in the journal every month. Some questions which we read, but that's not code of ethics. That's just a small trailer. है ना, पिक्चर अभी बाकी है, वो पिक्चर पूरा कोड ऑफ एथिक्स में है, 2019 edition, which is continuing to date. And do you know how many sections it has? Anyone? Because we have all signed audit reports, we've all said we have complied with the code of ethics, so everyone should be aware. The 999 sections. And we have been signing balance sheets all along, and I really don't know how many would have read these 999 sections. Now there are 999 sections, but somehow they start from 100, so there are 900 sections. 10% discount by the institute on the code of ethics. Another 100 sections are for members in industry. So 100 और गया, तो 800 सेक्शन हमारे लिए है. हमने एग्जाम में पढ़ा था, तो शायद द फ्रेश चार्टर्ड अकाउंटेंट्स वुड हैव रेड इट recently. Those like me read it because we are asked to speak on that. And there might be one member who would have read this just before and can ask you some question from some section. So you'll have to be prepared for that. So you read as a speaker. So that's how, thanks to the institute, I am well read. So we say these two things, which we don't by letter of law do, and that's the biggest risk we take. If we conduct our audit in accordance with the standards of auditing, कोई भी कहाँ से भी आ गया, कौन से कंट्री से कोई भी स्लीपर सेल आ गया, कुछ किसका एक बाल भी बाका नहीं कर सकता. And the institute did a lot to promote standards of auditing, to the extent the members said, what basics are you enforcing on us? But हमारे problem basics में ही है. And because the problem is in the basics, we are sitting ducks. Seriously. If something is not documented, it is not done. You have signed, you have qualified, but still you have not done it. There is nothing called oral communication, there is only written communication. You might have made an qualification, but are you aware every qualification which you make has to have a due process? And that due process is that you have to give reasonable opportunity to whom? To the management or those charged with governance. Then there's something which we use as short form, TCWG, those charged with governance. We don't even know who they are. Seriously, those charged with governance are the directors. Management is the KMPs, the CFO, the CEO, the CS. And I've seen most of the correspondence is with the financial controller. He is not the management. If I'm talking of those charged with governance, they are the directors. Where am I conversing with the directors other than only in the audit committee? So, we should get our homework right. So, when I am issuing an qualification, I have to first give the management or those charged with governance the fact that this is the qualification because of XYZ. I intend to qualify, please give your responses. The management either will give its responses, you will go through it, if you accept it, fine, you will drop the qualification, you will tell accordingly. If you don't get the response, you will write, once again, I am giving you one more chance. If you still don't receive anything, you will say I am going ahead with the qualification. If you receive something which is incorrect, you will ask for a rejoinder. If you don't get that, you will still go ahead with the qualification. So there is a process. So if I am a peer reviewer and I have seen a qualification, I'll ask show me the correspondence in accordance with SA 705. You may have qualified it rightly, but the process may not be right. So you could be still hauled up by the peer reviewer, or maybe even by an FRA, or even by the quality review board, whoever. So basics. Then two things which you will notice as a bank branch auditor, and please, as I say, our duty is to help our fellow professionals. As a statutory auditor, there is a reporting in CARO that whether there is any default, the word is default to a bank or a financial institution. If so, you just need to simply state it. And I've seen audited financials of borrowers where it is stated that there is no default, and some of these accounts are even loss assets for a bank. Forget your doubtful 1, 2, 3, even a substandard account or even an SMA 0, 1, 2 is in default, and that needs to be just stated. So, complete divergence. The stock statements given by the borrower on 31st March 2025 and the audited financials in many cases don't tally. You have certified statements of auditors as of 30th March. So that's why a different CA other than an auditor would certify stock statements as of 30th March, saying some figure, and the figure as of 31st March would be vastly different. I don't know who is wrong, the one who's certifying or the one who's signing, because no reconciliation can be possible of the two figures in one day. Again, the UDIN. You will get n number of certificates from various auditors across the country, and I have received many when I have to consolidate interest subvention certificates at a bank level. From the branch level, you will get n number of certificates even now without a UDIN. So, again, please at least phone them up and tell them, boss, please recall this on the records. I am not accepting this. Please issue this with a UDIN. To a statutory auditor, boss, this is an NPA in the bank. Please redraft your CARO at least for the next year. This year you have already signed, it's on record, it must have gone to 100 places. Then the concurrent auditor. Concurrent auditor would have written n number of things in the concurrent audit report that these are right or in order. Again, the quality is as good or as bad as the maybe article who is doing the audit because of the poor fees they give. So, if you find something in the concurrent audit report which is completely different from what you have observed, please tell the concurrent auditor at least correct this in the month of March, because what you will be stating will be completely at loggerheads, and if somebody picks it up and blames the concurrent auditor for not pointing it and taking action against him, at least he's rectified it at one place. So, to end, the LFAR, L, the limitation, please state your limitation that you did the audit post the year. So, whatever you did was based on checks before and whatever reports you so be very specific. Specific is terrific. So, limitation, bring out very clearly. The second is the frauds. Frauds can happen anytime, every time. You see a cockroach in a bank branch, very normal. And when you see a cockroach, you be rest assured that's not the only cockroach there. Cockroach theory. So, frauds agar ek bhi dikha, you will see a number of frauds, possibly. And there is another popcorn theory for the fraudster. When you go to a cinema theater and buy some Lays or popcorn, you don't stop at one bite. You will keep on eating till you finish it, even before the interval. So, a fraudster will not stop at one fraud. He'll test the waters initially. If he sees he can carry it out and conceal it, he'll do more. So, frauds. Then the assurance, limited assurance for the LFAR, no absolute assurance, reasonable assurance unless you are absolutely sure you can give a reasonable assurance, give a reasonable assurance, otherwise a limited assurance. And finally, the risk responsibility is purely of the management. If the management is not discharging the responsibility, please state so. Please be aware of your audit risk and how you are ensuring that you are minimizing the audit risk to an acceptable level. So LFAR, let the LFAR not be a report where the answers are shorter than the questions. The answers may be A, B, C. Please answer A, B, C. Don't answer D, or don't answer either A or B or C or either one or neither one. So be very clear, be very specific. Limitation, fraud reporting, limited assurance, and the risk responsibility of the management. Please word, please reword. If any doubt, please ask for help. Don't even trust God, trust only yourself. And your audit report is your only asset which will protect you against any liability. Thank you. Any questions I can take if there are any questions. There were some questions which I felt I should answer. One question somebody had asked of the system audit. So the system audit is definitely done at the bank level. Reserve Bank of India has a separate cell which does something called a C-site audit. There's a separate cell in RBI called Rabbit, and they come and do a detailed, and there are IT engineers who would do a detailed audit. So one is of the system. The second is each auditor, and the auditor doesn't understand his responsibility. That's I said the LFAR is the risk. When you are certifying the NPA automation, in the NPA automation, the auditor has the responsibility of ensuring that the automation software is working 101% right. So understand the huge responsibility. If you are not a CISA or a DISA or now not with sound system knowledge, please rethink how you are certifying all the years that certificate. Just because NPAs have been correctly identified by whatever manual means does not mean that the automation process is in order. So do you have the capabilities of testing the system? There is some responsibility on you. Just check what you are certifying. Our biggest risk is we cut paste the audit report. We only change the year, we change the date, and if there is a qualification, we change the qualification, we change the numbers. If you actually type what you are stating and just give a pause before each statement, especially the statement that we conducted the audit in accordance with the essays, an even deeper pause when we say we complied with the code of ethics, and code of ethics talks of independence, it talks of confidentiality, it talks of objectivity, it talks of competency, and it talks of professional behavior. And we also talk of essays and we say SQC1, and SQC1 is all about audit quality, it's all about your AQMM. So please look before you leap. Please introspect before you sign. Yeah, any questions? Yeah. So one is, if the documents are not there and if they can be called for peer review, you can either ask for photocopies or you get a letter from them that these certificates are needed for peer review. So whenever needed, you will give them access, or you create a record of what you did. This is there at the branch. Get the branch head to certify that. So you create evidence that you have seen this and you have done this. There's a lot of issues because the branch will say, or clients will say this is my confidential data and I will not give access to it, but get it in writing from him. And whatever you have done, what you have checked, this is in his custody, please get it signed. So it gives an evidence that you have seen this and this is in his custody, and because of the confidentiality, he is not giving it. I think that's good enough. And that's a larger point for the institute to decide, because he can always take shelter against the Information Technology Act. He can always take shelter against his data confidentiality and refuse to sign. This also happens in the bank branch concurrent audit, not just the bank branch audit. So it's a deeper issue. But as long as you have these two papers, I think you're good enough. Yeah.
Any questions? So on behalf of WRC ICI, I would like to express our sincere vote of thanks to esteemed speaker CA Abhijit ji for sharing his valuable insights and practical experiences as a net practice for our upcoming T20. Thank you.
T10, T6.